Welcome back to Doc versus IRS episode number 4. So far in this series, we watched our colleagues escalate up in the acuity scale. Episode number 1, Dr. Sherman, the ER doc with the rockstar dreams, but sloppy. His hobby loss deductions were disallowed. Episode number 2, Dr. Albasha, the ER doc flying to Sudan for CME, which was a little bit aggressive with lots of substantiation problem. So he was slapped with a 20% accuracy related penalty. Episode number 3, Dr. Olibari, the cosmetic dentist with 4 trust shelter. It was a criminal case. 41 month in federal prison. So today we step away from the felonies and into something that affects almost every physician listening right now. Today's case is not about fraud. Today's patient did not misbehave. She just put the IV in the wrong arm and watched everything cascade from there. So meet Dr. Rash Gambhir. She's a hospitalist, Northeast Georgia Medical Center. So she works the night shifts and got paid per shift, not on salary. But she received a W 2 every year, a regular, plain vanilla, straight up W 2. But on her tax return, she filed a Schedule C as if she was self employed, huh? That doesn't make sense. And she deducted her car, her cell phone, her scrubs, her medical shoes, her home office, and the internet, even the cleaning lady. About $14,000 in business expenses on a Schedule C she took as a deduction, but as a hospitalist. The IRS said, no, you're not deducting that. And tax court agreed. They said, no. And the lesson buried in this case is one of the most misunderstood concepts in physician tax planning, namely the home office deduction. So let's open the chart and gloves on. So Dr. Gambhir was a hospitalist. For my non clinical listeners, hospitalists are the internists who run the hospital floors. So they admit they sometimes fight with ER docs like me, manage and discharge hospitalized patients. They typically work shifts-based schedule, sometimes nights, often paid per shift. So to me, they're unsung heroes of every hospital, and they're the most likely get a tax question completely wrong because they're too tired from 7 on, 7 off schedule to even think about it. So she's been at the medical center since around 2009 and 10, and every single year, the hospital sent her a W 2. Box 1, reporting wages. Box 2, federal income tax withheld. Box 3 and 5, Social Security Medicare wages. Just standard W 2. Now, there's a little checkbox on the W 2 hiding in box 13 labeled Statutory Employee. And that checkbox, when it's marked, gives you sort of superpowers. It lets you deduct your business expenses on Schedule C even though you are a W 2. So hospital never checked that box for Dr. Gambhir. They just checked the regular employee box. No tax superpowers. She and her husband filed their 2012 return and they reported her wages on the front of the 1040 like normal. But then they also attached a Schedule C with zero income on it and about $14,000 of expenses, generating a $14,000 loss that wiped out other income on their return. The IRS opened the chart and said, hold on, you can't do that. So here's a central issue. And this is the part I want every doctor listening to understand cold, because I see this mistake often than I see non-compliant in a tax chart. So there are three categories of workers in the US tax code. Category number one, common law employee. So you get a W-2. Employer controls how and when and where you work. And your business expenses go on Schedule A as a miscellaneous itemized deduction. And under current law, those deductions are not deductible. So zero, gone, flatlined. Category number two, independent contractors. So you get a 1099 NEC and you control your own work. You file Schedule C, you deduct legitimate business expenses. You also pay self-employment tax 15.3% on the first chunk of the income because nobody's withholding Social Security and Medicare taxes for you. And self-employment tax is a side effect on the label. So it's kind of like a trade-off. Category number three, the statutory employees. That's a unicorn. And you get a W-2 with the statutory employee box checked. So you get the best of both worlds. You don't owe self-employment tax, but you can still deduct expenses on Schedule C. And statutory employees are very narrowly defined, though, like corporate officer, certain salesmen, life insurance agent, and a few others. And doctors are not on the list, not even with the referral. So Dr. Gambhir wanted to be Category 3 statutory employees. And she filed like she was, but she wasn't. And the court said, dude, you're a common law employee. Your deduction belong on Schedule A, and that means zero deductions for you. Now, here's where things get interesting for a physician with side gigs, locums work, and multiple jobs. The court applied what's called common law control test to determine whether Dr. Gambhir was employee or a contractor. And the single most important factor is, and I want you to write this down on a 3x5, like we used to do for pharmacology in med school, is the right to control how the work is performed. So let me repeat because it's important. The right to control how the work is performed, not whether the employer actually controls every move, just whether they have the right to. So Dr. Gambhir's husband testified that, well, she provided patient care under her own control and her own supervision. Sounds great, sounds independent. But the court said, that's not enough, man. Especially with professional services like medicine, the threshold level of control needed to make someone an employee is much lower. Why? Because doctors always exercise professional judgment, and the hospital cannot tell a doctor how to make a clinical decision, right? So the courts look at other factors like who sets your schedule, who provides the equipment that you use for your work, who handles the billing, who hires and fires. Her medical center pay her shift per shift, and that's feature sounds like a contract worker, but they also issued her a W-2 and did not check the statutory employee box and gave her access to hospital equipment that she needed to do her work and had her work hospital shifts based on the hospital's needs. And the court looked at the totality and said, common law employee, because the hospital was the one that had right to control her schedule, her work. So here's a lesson. The form you receive, W-2 versus 1099, is not the final answer, but it is the loudest signal. If your hospital, group, or employee employer issues you a W-2 without the statutory employee box checked, they're telling the IRS you're an employee, and the IRS believes them. Filing a Schedule C anyway is like writing a prescription that contradicts the patient's medication allergy list written on the wristband. You can technically do it, but the pharmacist will going to call you out. And the bigger lesson in Gambhir is home office, as I mentioned. This is one I want my hospitalists, my hospital employed surgeons, and primary care doctors, all of you, please listen up. Dr. Gambhir had, on paper, a beautiful home office, an 850 square foot basement, used solely as an office. She got computer, printer desk, bookshelves, cabinet of office supplies. She used it to take call-related meetings, completed her CME, and follow up on patient care. Honestly, on paper, this looks like a textbook home office. Looks pretty healthy, looks robust, looked like it should pass. So she claimed about $1,600 in home office expenses, internet plus monthly cleaning, and the court disallowed all of it. Why? Section 280A. This is a home office statute, and it is brutally strict. It's like a MELD score of tax law. Pure math, no sympathy. You meet the criteria or you don't qualify. So Section 280A gives you exactly 3 doors to qualify a home office. You only need to walk through only one of them, but it has to be one of these 3. So door number 1, you meet patients, clients, customer there. Dr. Gambhir didn't see a single patient in her basement. That would be weird, right? So door number 1 closed. Door number 2, it's a separate structure not attached to your home, like a detached garage or converted shed or standalone office building in the backyard. And Dr. Gambhir's office was in her basement attached to her home. So door 2 closed. Door number 3, the last one, it's a principal place of business. Again, your principal place of business. This is the only door she has left. And this is where the case got more technical. So stay with me, okay? So the law says principal place of business includes a space used for administrative or management activities of a trade or business, but only if there's no other fixed location where the taxpayer conducts substantial administrative or management activity of that business. So let me repeat that again because it's very, very important. So principal place of business includes a space used for the administrative and management activities of a trade or business, but only if there's no other fixed location where the taxpayer conducts substantial administrative or management activity of the business. And no other fixed location, that's a trap. And Dr. Gambhir worked at a hospital. The hospital is a fixed location, right? And the hospital is where she conducted the actual administrative work of being a hospitalist. And the court said, well, there's already a fixed location where you conduct substantial administrative activities. It's called Northeast Georgia Medical Center. So unfortunately, door 3 closed. And there's one more requirement layer on top. So it's just for FYI. For employees, the home office also has to be for the convenience of the employer, not your personal preference. There's no evidence the hospital required her to have a home office. There's no evidence that the hospital would not give her workspace. There's no evidence the home office existed for the employer's convenience rather than her own. So all 3 doors closed, plus the employee convenience requirement fail. So home office deduction die on the table, unfortunately. So here's a rule for every hospitalist listening right now. So if you treat patients at a hospital, your home office is unfortunately rarely deductible. The IRS will likely see the hospital as your principal place of business. Doesn't matter how nice your basement setup is, doesn't matter how many CME hours you knock out there, doesn't really matter how much paperwork you do at home at 2 a.m. after 12-hour shifts. But there's a narrow exception. If you have a separate, legitimate trade or business that is distinct from your hospital employment, like a telemedicine, consulting business, a med legal expert witness practice, or even real estate venture, that business can have a home office, and the deduction works for that business, not your hospitalist W 2. And here's where it cascades. And this is a part of medicine we all hate, the secondary complication. So once a court ruled the home office wasn't her principal place of business, the next domino fell. Dr. Gambhir deducted 13,000 miles for driving from her home office to the medical center, plus a few hundred miles for a court case and a physician network meeting. And the court disallowed all 13,000 miles. Why? Because if your home is not your principal place of business, then the drive from your home to your job is a commute. And commuting is almost never deductible, except in certain temporary job situations. We covered this in episode 2 with Dr. Albasha. Same rule, different patient, same diagnosis. So single bad ruling on the home office wiped out nearly $8,000 worth of mileage deduction. One domino falls, two dominoes down. Once a home office becomes septic, the mileage comes down with it. The network meeting and court case mileage, they're disallowed for different reasons. Because vehicles are listed property under 274, and Dr. Gambhir did not have a contemporaneous mileage log and did not document the location of the meeting, didn't document the organization, did not substantiate the trip. We covered 274 strict substantiation in episode 2. Again, same listen, different doctor. So what should every W-2 physician take from Dr. Gambhir's case? I got 3 discharge instructions for you. Lesson number 1. Your W-2 is the diagnosis. Trust the chart. If your employer issued you a W-2 without the statutory employee box checked, you are an employee. And you are employee for tax purposes. Filing a Schedule C with zero income and pile up expenses is not aggressive tax planning. It is an invitation to an audit. Lesson 2. Home office deductions for hospital-based physician would rarely work. The 280A administrative safe harbor exists, but the hospital is a fixed location where the IRS will likely assume that you perform a substantial administrative or management activities there. So the safe harbor would mostly close. The deduction works best when attached to a separate trade or business like telemedicine, consulting, expert witness work, real estate with real income and economic substance, not your hospital W-2. Lesson 3. If your home office fails, your commute is not deductible either. That's the cascade. One bad ruling becomes 2. So track your driving in contemporaneous log if you have any business mile at all. So here's my final thought. Dr. Gambhir was not a fraudster. She wasn't trying to game the system. She wasn't even trying to be that aggressive. She was a hardworking hospitalist who probably listened to a friend or read a blog post or got bad advice from a tax preparer who didn't understand the W 2 versus 1099 nor statutory employee status. And she set up a real home office, a nice one. She kept some receipts. And she filed the returns too. And she believed she was doing it right. But she filed it on the wrong form. And once the form was wrong, every deduction underneath it collapses. Orders were essentially placed correctly and the medicine were the right medicine, but they just got put under the wrong patient's name. In tax law, that's a whole game. So if you're a W 2 employed physician, hospitalist, ER doc, employee surgeon, your tax planning lives on a different track than the contractor docs. So your wins typically come from things like maxing out your 401k, 457b, sometime backdoor Roth conversion, HSA contribution, and if you have a side practice or side gig, building that into a real Schedule C business with real income would work. And what doesn't work is taking your W 2 employee expenses and dressing them up as a Schedule C business. That's not tax planning. That's a chart flipping exercise that ends up in a deficiency notice. So don't be Dr. Gambhir. File on the right form. Get reimbursed when you can. Build a real side business if you want Schedule C deduction. If your tax preparer even tells you that you can put a hospital expenses on Schedule C, get a second opinion. Just don't doctor shop until you find one who agrees with you. I'm out. Please use the right form. Adios.